Hello everyone and welcome to Options Paycheck Live. Today I will review my performance from the last week and I will also show you my open positions for this week. What I do is I have simple strategy that I repeat every week. I'm trying to beat the index, and how it works is I sell cash secured puts or covered calls to get premium every week. I use technical analysis and technical indicators like RSI to help me to assess if or what is the strike price I should use. And then with the premium, I'm looking for undervalued opportunities or companies, and I invest to those, and ideally I turn them in the cash machine again, and I'm selling covered calls on those. And with the premium, I'm again repeating the strategy. So strategy or the results from the last week is I collected premium $84, which was very small, and you will be surprised what has happened and why I have so little premium. So stay tuned, it will be very interesting to see the details. Overall, I collected premium $6,296 since April 2025, and it equals to annualized return of 29%, or almost 30%. This is how my position changed and what I've been doing last week. So on Tesla, I sold shares and took some profits. I will go to the chart and I will show you why, but you can see that the price is dropping, and I sold the shares actually for $325. So I had like $10% profit, and the reason was actually I wanted to lock in profits as I expected the price to drop, and it is happening right now, and so we will go to the details. So I still have 3 shares and I'm waiting basically for the dip. And because what has happened last week, as the price was peaking and then it dropped, I will go to the details, but bottom line is I lost $128 on trading options on Tesla last week. Nevertheless, for Gamestop, I sold puts and calls and I earned $213, which basically helped me to cover the loss from Tesla. But that's why my overall premium for the last week was only $84. And what I did also, I bought additional shares from Google, and I bought for $171.90, and now the price was closing at $177. We will go to the chart to see actually what the price is today, but I'm earning some money already. I'm in green already on Google since a few days. And the only drawback of Google is that the premium is not so high, it's not so juicy, but I think it's pretty undervalued for now, and it might be quite interesting play short term, at least short term, in regards to AI and in regards to what seems to be happening on the market. We will go to the details. The cash position is almost the same, or is the same as last week, and overall I have $105,000 of the value of my portfolio. So portfolio performance last week, it grew 1.46%. So overall, my performance since April 25 is 34, almost 35%, and I'm outperforming S&P 500 and Nasdaq as well. It's interesting because Nasdaq last week did almost 5% or 4.5%, something like this, which is way better than what I achieved last week. I'm still doing better than Nasdaq, but I think it's really interesting to see how well Nasdaq was performing. S&P and S&P 500 was doing quite well as well, but especially Nasdaq is interesting. It seems that there is really money flowing into AI companies, and so we will look to what we can do actually with that. All right, so my portfolio allocation as of now, as I was saying, I took some profits from Tesla. I have position in Gamestop. It's growing nicely, following the channel. We will look into it. Still small position Cleveland Cliffs and CLIR. I'm waiting for display to materialize, and I have a newly position in Google, and I have 32,000 in cash as well. So now I can show you my position in Interactive Brokers and what we have here. So GameStop, 1,400 shares. It's quite big position, so I'm selling covered calls there. Google, I can sell covered calls as well. 194 shares, which means I still need like 6 shares to have 200 to be able to sell 2 contracts, but at least 1 contract I can always trade. For Nvidia, I would need to be selling covered puts, but basically what I have opened for this week, I opened covered calls for GameStop. I didn't open covered calls for Google because we can have a look, because for Google the covered calls are very, I would basically earn $19, for example, on this one, right? So I would go for 185, maybe I would earn $19. Well, is it worth the risk? Yeah, probably not. So that's why I'm not trading the covered calls right now on Google. I might do it at some point. All right, so let's go to my sheet, and I'll show you what has happened last week with the trades in detail. We will discuss Tesla first, and I had open position actually on $365 strike price. I will go to the chart. And show you actually what has been happening. So open position on Monday morning, right? And then all of a sudden the price started to go up a lot. It grew 8% during the day, but the top was somewhere here, 356. And so I really I look at what is the reason. The reason was that the Tesla robotaxi launched in Austin. I think this is really good learning, right? So I thought, well, because it's news, the price is going up on the news, maybe it's really significant, and therefore I should jump on and I should actually close the covered calls and be basically in defensive position and keep the shares if if the price actually is going up. And so because I was convinced of this play, I not only closed the positions, right? So I actually closed this one and lost $312 because to buy it back was quite expensive. First I opened the covered position and get $125 per one contract, but then when I was closing the position, it cost me actually $436. So on this covered call, I was losing $312, and then I actually reopened. I rolled the position, or reopened the position to 390, and then earned $78 on the other covered call. I don't remember honestly right now whether it was rolling or whether I closed and reopened. It doesn't really matter. But the point is, it was really like something. The price was something like this at the point when I was doing it. And then I had also opened cash secured puts for 315 strike price. It's still here, right? It's for the last week. Last week the price didn't reach 315 by end of Friday, so it was around 323, and so therefore the option contract expired worthless. So for days I was earning $105. Cleveland Cliffs, I didn't open any contract. And for Gamestop, as I was saying, right, I opened one covered call. I can let me actually go to Tesla first and discuss a few more things with Tesla, because I would like to discuss also the other part of the trade, what I did. So I not only closed the covered calls as the price was going up, but what I did also is I was so convinced that this news is really moving the market and the price up, that I also bought additional shares, and I bought them for $345. So it was next day. So next day, I bought the shares. I let it slide a little down at the beginning, and then bought the shares for 345 maybe. And it seems here. And then if we can go to the details. I think there was good reason why to. Let me just try this. Right, so it was somewhere here. It was somewhere here probably. I was buying the shares. See, so it's here. So this is sort of resistance here, right? So you see it here, this line, and so then the price was going up, and so I bought somewhere here 345. It was going up, but then it started to actually to fall down. I let it go a little with the stop loss of 340 or 41 maybe, and so somewhere here I applied stop loss, and basically I lost I think it was 100 shares or maybe even more, and so I maybe it was maybe even close to, no, it wasn't close to 200, it was probably 100 shares, and so I lost like $5 on one share, so probably like $500 dollars. And so then the price was just going down, and what I did later on, I was assessing what is happening and what might be happening more in the upcoming days, and I basically realized that probably this price will not hold and it will keep falling, and so I locked in some profits for $325 somewhere here. It was even before Friday. I think it was on Thursday. And then since then, you can see that the price is dropping, and I'm waiting for a dip, basically to step in to Tesla again. But we can have a look on the channels I have here. It's 1 day granularity, and it's quite busy the screen, but I mean, there is this major multi-year channel, right, that you can see. Actually, it's going here from March 2020. So it's like 5 years channel, and it is going. If I just select it, yeah. So it's just tracing the bottoms throughout the years, and then the tops. So that's the main 5 years channel that Tesla is following. But then we have a few more that are probably less. I can delete. I can maybe delete this one, this regression channel. It's just sort of copy. But then there is this more maybe recent, right, that is going from January 23 when Tesla started to grow again, and you can see that within this regression channel we are somewhere in the middle. I believe that actually that the price might be dropping, maybe potentially even to this 5 years channel. It's something that can happen, right? So this is what, January 23 till April 24. So it's like it's maybe 5 quarters. So now we are 1, 2, 3, 4, 5. No, 5 quarters. I mean, it can really happen. What it takes for Tesla is just a few negative news. I mean, there are actually, like, macro-wise, there might be coming positive news actually, but for the company itself, it might be that there will be few negative news. Something will happen with robotaxi. There will be whatever. There will be an accident. There will be maybe less demand. It can happen very well actually that the price will drop significantly, and then it would be again the entry point. I don't know if it can go below $200. Maybe it can touch again like 210, and then it would be a really nice entry point again, because long term Tesla, with the people who are working at Tesla and with the innovation they are doing, and with their pipeline of new products, what they have and what they are working on, long term it's really nice play. Short term it's nice play for the volatility, right? So you can actually sort of swing play this. You can be selling options. So there is a lot of room how to earn money on Tesla, and I'm going to participate in this game. All right, so this was for Tesla. We can have a look on. Maybe we can have a look. So let's have a look on Gamestop now. And so for Gamestop, there's this channel that Gamestop is following since the dip, and my purchase price for Gamestop is somewhere here, right? 20 to 70. which I already had some position before as well. So I think like the average price is maybe like 23.30, something like this. And so I'm above the average purchase price, and I'm selling options. For this week, I sold on Gamestop. Covered calls, and I sold also puts. So covered calls. It's interesting that the premium on Gamestop is getting lower and lower. What you get is there is not much of volatility, right? It's slowly getting up in this channel, and therefore without volatility there is no low volatility means also low premium on the on the options. So I anyway sold few. Covered calls. You can go to Interactive Brokers and see how the calls are doing. So the price is $26.50, and it's right now it's in the loss, but I assume it will expire worthless. When I was checking open interest for this week, it was interesting up to $25 exactly, right? So there is quite a few options open with the strike price of $25, but not much more afterwards. I can reload the page and we can see if there is any change, but I don't think so. Yeah, all right. So still the same. I mean, that's important to watch for the options, especially on Gamestop, because there might be always options ramp up which will drive the price up. What I'm doing now, I want to see this chart. I want to see how many options are open. So for this week, obviously 150 options open. It's not much really. Also 3 or 250 for monthly is not much. It's it's really sort of boring period when it comes to options. It's interesting to see fees. Might be that Interactive Brokers are actually charging a lot, but I think the fees are high because the brokers don't want necessarily retail to or anyone to trade options there, or maybe there is so much demand for options that they can put the fees up. Not sure which one it is. So yeah, that's Gamestop. For Gamestop, I have also puts. And so to finish the thought, right? So the puts are for $22. Is it correct? No, for $23. So $22 it was maybe last week. So now they are for $23. I would be probably better off if I just bought Gamestop. But I'm keeping some cash. In case of dip, I think it's good actually to have some cash. I will go to Google afterwards, but last week I had like 1/3 of my position was in cash, and that's actually what I have like sort of all the time, right? 1/3 or 2/3 in equities, in shares, and then 1/3 in cash, so that I can be selling puts. There you get nice premiums, but also it gives you some flexibility, to allocate it to some good opportunities. If there is a dip, it's always nice to have reasonable reasonable cash position to allocate, to buy the dip. And so for GameStop, I have the puts for $23. Would need to go way below the channel. I mean, it can happen. It's not impossible, but this red line would be the first resistance, which is, yeah, it's somewhere at $23. So there is some safety net, if you will. The RSI is slowly growing. MACD seems to be also turning. So yeah, I mean, let's see how this will play. But I guess there is a good chance actually that it will continue. It will continue in this channel. Is there going to happen something like this? Well, nobody knows. Would be nice, right? Would be nice if the price picked up, but I mean, we will need to wait and see what will happen. So for now, yeah, let's follow the channel and see whether something is changing. It's still going like at the bottom line of this channel. Yeah. So for covered call, it's slightly above the resistance here, right? So you see actually the support from the past. The price didn't break below $26 here in multiple cases, so it works as a resistance. And so I put a strike price. For covered calls above, so it's 26.5. I can actually move it a little bit up to visualize it. So it's somewhere here. Today the price moved 3.5% up, or almost 3.5%, which is quite nice move. I mean, if it keeps moving like this for next 3 days, which will probably not, but if it was moving like this, then probably the options will be assigned. Yeah, but it will be nice profit, right? Going from 22.70 in what, in maybe 10 days to 26.5 would be nice. But I guess I would re-enter the position again. I assess the trades weekly, so I would see. So this is for GameStop. What else do we have? Google. Shall we talk Google? We shall. So as you know, I had position from before. I don't know actually when I entered the position. It was maybe somewhere here. Maybe somewhere here. Was it here? Yeah, well, yeah, actually, yeah, I think it was maybe even here. So I think I had a position for really 169.90 or something like this. And it might be that I entered the position somewhere here, because I remember it was, or maybe not. It doesn't matter so much. Well, it actually matters for learning purposes. It would be good to know if I remember the position was quite insignificant loss. Was I thinking about buying it here? Or I maybe bought it even here, right? Because it was, I don't remember. I need to have a look actually, and we can discuss it next week. Anyway, my position is so originally I bought maybe like 8 shares for $169, and then I bought additional 190 or 188 shares for $171, and it was last week, right? So I had this situation with Tesla when Tesla was just dropping, and I lost here the money, and I realized, well, actually the price is dropping. It will probably keep dropping because for multiple reasons. Seems like the news really didn't help. Also, then if you look at the chart, it didn't break through the resistance at 370. The price is the price, like it seems, it went from what, 475 to 220, then it went like 50% up maybe, right? So this is maybe like halfway through. Then it didn't make it more, it dropped again, it tried to go up while it lost the momentum, so now it's selling. Actually, it's selling less and less, so maybe it's losing some momentum for selling and appetite for selling, but it takes maybe very little actually, and the price might drop significantly, right? So when I was looking at the chart, I was like, yeah, well, this thing is going to fall more. Maybe you sort of see examples of this somewhere here, right? So and more in the maybe more even here, though this was really like a multi-quarter, maybe even multi-year trend downwards, while this was already in the upwards trend. But here, it goes up, then it falls down. It's probably a little bit more than halfway through, then drops, tries. It doesn't even reach the same levels as before, right? And then it drops. It's slightly different situation, but it is the stock is not necessarily in very strong position, and it can happen that really one bad news will just bring it down, and then it will be dip, which I would be happy to buy, right? So somewhere we are now in the middle. And so these are the reasons why I decided, well, let's actually allocate the money somewhere else. Let's take the profit from Tesla, which was like 10%, and let's allocate the money somewhere else. And what I did, I bought shares of Google, $171.90 as a purchase price, 180 shares maybe. And since then, actually, it grew significantly. Especially the Friday was very nice because it was like sort of flat, and then towards the end of the day, maybe like 3% up. It was maybe even negative, right? So we can go to more details and see here. So the Friday, so it was 2.5% actually last hour. It was maybe even last half an hour, maybe even last half last half an hour it was additional 2.5%, went straight to overbought, well, for 30 minutes, but yeah, I mean, it was quite nice to see it on Friday that the stock is doing well. So today it opened actually significantly higher. Then it started to drop. I opened the puts for 177.5. Let's see how this will show. Maybe there will be a little bit of pull off, right? So it might actually drop a little bit more, and then I expect it will actually it will go up again. So yeah, I mean, the puts, if they, you know, if they are assigned, then the same place as always, right? I will be selling for 177 and a half, so that or at least so that I don't have loss if the options are assigned. But yeah, I mean, overall, I think Google is really very good company. It's in a great position for AI. I mean, what Gemini is doing and how they, you know, how they are becoming profitable. I think this is not just one, or I believe it's just not one quarter thing, right? I think they are really like optimizing for profitability now, and they are working on Gemini, and they are working on the models. The search obviously has Gemini integrated, and so for things where maybe you don't have so many ads, Gemini is already in Google search, right? So it's a reason why to go there, and then there you can do searches that are actually easy to monetize. Then they will find a way actually how to monetize the models as well. Definitely with the cloud services and Google Suites. I mean, it's really great suite or set of tools that you can provide to enterprises, and I think they are positioned better than other cloud providers, right? Than Microsoft or than Amazon, because they have, I mean, their set of tools for companies, I think, is a little bit better than from Microsoft. The cloud services, I believe they are just better for collaboration and for work. And so if they can integrate easily the Gemini, and again, I think from the workforce perspective, from the experience and skills within the company, I guess Google is positioned better than Microsoft. So I think they are really very well positioned for being successful player in AI. And then if we can call this bull market, if this bull market actually is about AI, then Wells should be basically winner. I mean, of course, Nvidia, and we can touch Nvidia as well. It's a shame actually for me, Nvidia, but Google right now is positioned well to be with winner in this AI race. As of now, they have nice product. I think they will be the earnings again, not only on the revenue but also on the profitability, and so the price might spike, and so we can relatively soon see all-time highs again. Let's see if the price will move as I predict, then the puts will not be assigned, and I will just be getting additional profits on my open positions. I spoke about Nvidia, and so Nvidia, when you are selling option contracts, so when you are selling option contracts, then it's not good necessarily for all type of markets, right? So when the market is moving to the side and it's sort of volatile but really moving to the side, it's perfect market for selling options. When the market is maybe going a little up, it's okay market for selling options. Maybe the volatility will not be so high, but if it's like volatile and just a little bullish, then it's okay. When it's the same, like a little bearish, right, volatile ideally, it is great market for selling options. When it's bullish, like it is now with Nvidia and with the AI companies, it's not really so great for selling options. And I had 100 shares for price of $105 at some point. Yeah, had to buy somewhere here, right? It got assigned somewhere here, and I think it dropped actually to 87. And then what I did, I sold actually for 100. I sold covered calls for 105, so it got assigned, and then I had another batch of 100 shares for 115, and again, and those 115 I think got assigned already somewhere here, and then it was just running up, right? And since then it wasn't stopping. If you remember, we were talking about this resistance, so now actually this resistance will work as a support, so I can change the colors, right? So now it will be working as a support. This I can even remove and delete because not valid anymore. Here I don't have actually any open position, so I mean I can delete as well. Nvidia is I mean I missed this one. I was hoping that it will drop. Obviously it's not going to drop, and now it's in oversold territory. Probably it will go on this upper part of the channel for some time, or maybe it will go sort of sideways, but see, like when it was, it might pull back a little, but it's just one rocket. It's just going up and up and up. So this is for Nvidia. I wanted to show you a few more things. If you look at the portfolio allocation, right? So or actually this triggered one thought. There is Nasdaq it really grew significantly last week, almost 5%, and I was growing 146. Of course, if I didn't do the losing trade with Tesla, it would be way better. But Nasdaq doing so well is sort of a reminder for me that I should actually look for other companies that are maybe able to do better returns than than Google and Nvidia and Tesla. I have, of course, for those reasons, I have their CLIR sign technologies and to some extent Cleveland Cliffs as well. So we can let me just go there and show you CLIR sign technologies. So this is my purchase price, and here I sort of expect and hope that the price will pick up again, and I can, well, either it goes ballistic for good news and profitability, or there might be actually some volatility. What you can, this is interesting. What you can see here, it's for a couple of years now it's moving in this sort of channel, and it's because it's innovative company. They are launching, they have products on the market, and they are selling their products to customers, but they are still not profitable. They have burning rate of or they have cash for maybe next 2 years with the burn rate what they have. And so I there is no risk as of now that they would go bankrupt, and they are selling actually and having more contracts with the customers. But they are still not scaling, right? They are still finding their place on the market and so on. So they are in the innovation valley, sort of. And you can, it's defined by this volatility, right? So people get excited, it goes up on a good news maybe, or positive sentiment, whatever it can be. It can be some macro, it can be trend for specific tools or specific products what they are doing, and then actually the sentiment can change, right? So goes down and again sentiment change, goes up. And so you can see actually it is quite volatile, right? So it's going from half a dollar to $1.50. So it's like 3 times within what? Within it is half a year, right? In half a year it can go like 3 times up. My purchase price is somewhere here, 55 cents. Is it? I don't know if there's analyst rating strong buy. Well, I would not really bet on this, but the reason why I was buying this is actually that for CLIR Technologies there were some insiders trading, and I can have a look. Well, I would like to talk later on about Asana as well, but for now let's have a look. Let's have a look on the CLIR Technologies, and we had there some purchases last 2 years. So value, it was 10% entity, and the value was 3 million. And I thought, hold on, CLIR last 2 years. So this insider bought only CLIR Technologies, and the price was actually above my price. It was 91 cents. It was in the middle of 2024. So if we go to the chart, it was somewhere here, middle 2024. Yeah, it was somewhere here, right, when the price actually peaked up. But the insider was not selling, right? It would need to be here if the insider was selling, and there is nothing. I don't know if we can. I mean, you can select all the transactions and see if something is changing. Well, nothing. It's even less. Multiple days. Interesting. So for this reason, and when I was looking, so for the reason of insiders buying, right, for this price and not selling, and also looking at what they are doing and how they have new contracts, we can have a look actually on the news. CLIR sign technologies, CLIR sign. Let's go to the news and see if there is something. Beginning of June, announced boiler burner order from California boiler. So we can have a look on the details, if there is actually for how much it was signed. No, there is no size of the contract. May 27, changes in the board of directors, provides first quarter update. Maybe we can have a look on the first quarter update. We had a productive first quarter, expanding both our sales channel and our product offering. Additionally, we received commitments for the first commercial installation of our CLIR eye sensor at a major refinery, and we are seeing renewed interest in our flaring solution to meet emissions requirements for prominent oil and gas production customers. Well, this would be really nice, right? So if they really got some nice contracts from oil and gas production customers, and the technology would get really on the market and would get good reputation on the market, get good references, then the price might actually be impacted and the price might go up. Right now, it's not trading super nicely, right? It's sort of going down. Let's see if it can sort of drop suddenly, like sort of like here, right? Down, a very similar channel, and then drop. We will see what will happen, but it might be actually that it will find it seems like it finds the bottom, right? So it's here. It's multiple times, like here, then it was spiking up, and here it's actually 2 times, right? So day after day, it touched 52 cents, and then day after it actually started from there and went up. So maybe it is going to go upwards again. Well, but that's what I'm looking for, right? I'm looking for some companies that can really multiply the earning, or that can multiply the price, and CLIR Technologies is obviously one of them. It's, as of now, the price seems to be beaten up, really down, and yeah, I can hold it for a little, for way longer actually. I have small position, but I'm happy to hold it and wait for actually for the price peaking. And then in the similar space, sort of, right? Like I was looking at the insiders buying, and I realized for Asana there is something interesting happening. So I like to look at the 10%. Insiders, right? So it means like strategic entity, someone owning more than 10%. And then if it's, I need to check actually if Dustin Moskovitz is CEO of Asana. Asana CEO. Yeah. So Dustin Moskovitz, Asana CEO. Obviously, he's a billionaire. So what I wanted to say is he's buying more shares, right? Last price was $12.97. It was for 1 million. Well, 1 million for his net worth is not really much, because he's 17 billion net worth, but might be significant that he's buying. So let's have a look actually on Asana how the chart looks like. See, it's also, so what is the bottom? 11.18. RSI almost, what is the daily? RSI oversold, and then now starting to get up a little. it might be good opportunity actually to step in. Is there any? I think actually what it is doing right now, it is, let me just make it bigger for you guys. I think it's getting profitable, right, or not? So we should go to Asana webpage. Asana investors. Financials, quarterly results. Just a month after launching AI Studio, we have already crossed 1 million in ARR and head into Q2 with robust, rapidly growing global pipeline. Huh. Are they profitable? So, looking ahead, we are raising our full year non-GAAP operating margin guidance, reflecting our confidence in our ability to drive durable, profitable growth, even in the face of macro uncertainty. We are focused on driving efficiency while remaining committed to investing in AI, innovation, customer health, and customer acquisition, key drivers for long-term growth acceleration. So I would be, that's nice actually, you know. So they seem to be confident that they can be profitable. They are not, you know, it's not like 20% growth, but it's solid. If they can start to be profitable, then it's just better, right? It means they cannot go bust, and maybe the price also might recover. I don't know actually what is the financials. Maybe the market capitalization is actually 3 billion. 3 billion. It's how much they are doing. Like if the free cash flow would be, if the multiple is 10, then they would need to generate 300 million free cash flow to justify such market capitalization. How much do they generate as a free cash flow, if any? Maybe it's here. Go to financials, more info, overview. Debt levels, okay. Cash flow here. Free cash flow. Negative, positive, negative, and then, all right, yeah, well, so yeah, I mean, this is interesting, but I need to look at the valuation better, but right, just from the free cash flow perspective, you would need to have, but I need to look at the multiples as well, right? What is the multiples? But it's software as a service company, and they, I don't know, they are not doing very well right now. Well, there is actually a few things to look into, right? Obviously, it's interesting. It's interesting that strategic entity is buying actually more shares. I think that's encouraging. 12.97. The current price is what? 13.50. So I mean, we would need to, I mean, it's still okay, right? It's still okay. Technically, it looks nice. It looks like good position to or good time to enter. But I would need to look at what is the AI play actually that they are doing. That would be one thing to look at, and then the other thing to look at would be the valuation, right? So what is the multiple actually? What is for this industry and so on? So I'm just trying to do a regression trend here. So if I do from here to here, okay, it's going down a little. Maybe what I want to do is not actually the regression channel, but maybe just the parallel channel, right? So is it sort of this, something like this? It is moving within this channel, right? So again, it's a innovative company, right? They are creating the product, they are scaling up, so they want to be profitable. It seems that they are reaching the profitability now, and they are actually at the bottom of the channel. Standard reported estimate, so they are surprised, right? So yeah, I mean, the earnings was obviously positive, and they have history of actually beating the, they have history of beating the earnings. It's interesting. So let's have a look on Asana. So AI play would be good to understand, and it would be good also to understand the multiple, right? How the software as a service companies are doing right now. 10%. I mean, 10% growth is not bad actually. I'm really interested. What is the AI play they do? It will probably be see how it works. I want to see this. Asana AI. Capable AI Studio. Transform the way you work with AI Studio. Create workflows in a no-code builder to handle the work. It just seems, I mean, I would need to see the details, but it just seems that they put AI in front of the previous name. So they had probably Asana Studio and they rename it to AI Studio. I mean, I'm not saying it's not using any AI, right? It can be very well. It can be actually, there is a model that that takes a look at the data and let you like prompt Asana. But does it have any edge over any other? Maybe. Well, something to look into. All right. So we discussed Google, Gamestop. I think we discussed everything, right? We discussed the portfolio performance, portfolio allocation. So I think there is nothing more I want to discuss today. I will be back again during the week if there is anything interesting happening on the market. If not, then I will be back again on Sunday with the planning session. And for now, if you find these sessions, these live streams, if you find them helpful, please subscribe, and you will see my sessions every week, and you can follow how I allocate my portfolio, my cash, and how I actually how I'm doing against the index, and how I am collecting premium every week. All right, so that's it. Thank you for watching, and see you and hear you next week.